Welcome, Kentucky traders, to the 21st of May. Today we're looking at natural gas to US dollars. It's been quite a ride down. Tried to recover. We had a little pop last week. It wants to stay above $2, but it's just not looking at the moment. I do think over summer it's going to get over 2. My price target is around $2.35. Hard to see at the moment, and I think that's going to only get there through some severe prolonged heat. And coupled with the production, as long as a number of this production stays offline and demand picks up noticeably to the moment. So let's go to the chart and see just what's going on. So this is on the 4-hour. So as you can see, we had this nice rally. It popped over here. There was that pipeline issue. Really was much about nothing. Since then, down, up, nothing too much to mention. However, I'm really looking at this line because the biggest issue, the biggest thing that's going to decide where this thing goes is this builds. As you can see, we still got slightly larger builds coming up, bigger than the average, with storage that's already quite high, leading to neutral to bearish. Now, if we scroll down, this is from netgasweather.com. Great little report. Subscribe to them. Really good information. This is a production we're talking about, and that production's mainly come off from the oil shut-ins, production cuts, everything else, as nat gas being the byproduct. On top of the production cuts, of course, we've got the massive demand destruction as well. Now, you would think that with this production coming down so much, prices be rallying hard. They're not. And that just shows the amount of production that has been taken off. Sorry, it's the amount of demand that's been taken off the table is just not causing the prices to rally. There's a nice little article on oilprices.com the other week. Now, they were talking about storage being full. Now, if that happens, well, that's going to be a absolute hemorrhage of the price. I feel, though, that if that was going to happen, we would be seeing a bit more in this price now. Natural gas traders normally looking 2 to 3 weeks ahead minimum, obviously even further. But if there was a real risk of that, I do wonder if we would have seen this pop here as soon as last Monday. We've got the storage tonight, and I think that's going to give a bit more direction. I think, obviously, a larger storage is going to give people the frights that this production here is just not really affecting. Before the virus thing, it was pretty easy to see this summer. This is the natural gas burns. I still think we're going to see a record here. You can put me on record for that one. How much? Who knows? But with the power stations, I think even with the COVID demand off, we're going to see a record. And that's where I think we're going to get quite a bit of support in the natural gas prices. Here's one of the forecast from FX Empire, what's his name, David Becker here, and he was just talking about down the bottom here, declining fails to buoy prices, and I think that's the exact thing that a lot of us are seeing, that even with the rig count going off, production down, it just has not pushed prices up. I don't think that we're going to see some crazy summer where all summer it's $1.50, $1.40, even if somehow storage gets full. Well, all bets are off then, really. Who knows? But at the moment, I'm short-term short, mid to long-term, not long-term bull, I would say mid-term bullish. But once our price gets up to 240, 250, and we start getting through the middle towards the end of summer and then looking towards the next shoulder season heading into next winter, we're going to see these prices again. Now, the break-even price, this is below cost price, I believe, for nat gas. So we're here below this, and it's still sitting here. It's going to be interesting. So for the moment, and we can just another little tick down there. So, yeah, for the moment, staying happily short. These little blips are not really an issue to me, but as we get lower and lower, especially into these prices sub $1.40, if we start seeing that, reassessing the storage potential fill up, and see what sort of demand we're getting back on the table. I think as soon as we see the glimmer of hope that demand is going to return anywhere near what it was, even just some hope we're going to see a good price rally. And then, of course, once that price rallies, it's going to zoom past 2. Once those shorts start getting squeezed, getting closed, we're going to see a nice uptick there. So happy trading for the moment. That is all from here.